Welcome, everyone, to this week's podcast, Forte Financial Mortgage Group. We have Bill Granata. Welcome, Bill, to the show.
Thank you.
Thank you. Bill is actually our first branch manager. I'm very excited that we've actually branched out and opened up our first branch in New Milford, Connecticut. We are now located on 4 Main Street in New Milford.
Yep, right on the green.
Bill Granata brings a wealth of experience, knowledge, the respect, and just incredible amount of, positive reputation and things that this man has done in the New Milford area, specifically in, more in Connecticut, but the New Milford area is just incredible. So I'm grateful to have you as part of the team.
Thank you.
And this is an official welcome and introduction podcast, and to talk a little bit more about you, why you're here, what other people can learn from your, future customers, current customers, realtors. So, Bill, why don't you tell everybody a little bit more about yourself and some of your backgrounds, and we'll go from there.
So I grew up in New Milford, Connecticut, and I always had a dream of coming back and doing something there, owning my own business. And I got into the mortgage industry in 2001, and I started with a broker. Sort of learned the ropes. Back then, there was no licensing. There was no, really anyone could be a mortgage professional. There was no testing, and the person I worked for had no prior experience. So you really learned on the fly. And I did it for about 3 or 4 years. I was a processor. I was an originator. I was really learning the business from the ground up, which was great. And in 2005, I decided, hey, I'm going to return home to my hometown. My wife and I decided to return home to my hometown, and I started New Milford Mortgage. And I rented the space right on the green in New Milford, which is where I wanted to be, right in the center of everything, and began sort of building a trust with the community on what mortgage financing was, which was providing options, cost-effective options for homeowners in there, just like me, raising families, friends I grew up with, went to high school with. I wanted to provide a service to those people. And the mortgage industry was the perfect way to get into the community. So doing that, I did that for about 8 or 9 years. And then 2008 came, and everything changed in the lending world. And it became really difficult to be a mortgage professional. Then all of the compliance came into effect, and I decided to then partner with banks. Larger banks, and I became a branch manager of a bank. Another great experience. I learned a lot of the compliance, obstacles and burdens were removed from me, which allowed me to be what I was, a salesperson, a mortgage professional. And over the years, I've been doing that, working for different banks. And most recently, I decided it was not playing out the way that it needed to be. I was not able to service my clients with the best products and the best pricing like I had been in years past. And hence why we're sitting here.
Well, thank you. That was a great intro to put a little bit of color on what's going on here. Let me just jump in with just for people watching this, perhaps other loan officers, realtors. Things have changed dramatically. Like you mentioned early I started in 1998, same timeline as you, no licensing, nothing. Nobody had to know anything. And it was just the wild, wild west, as a lot of us call it. You saw, the Big Short. There's some of those, what most people not in the business see as a joke, or there's no way, that's what it was like. That's what it was like. With the crazy compliance or lack of compliance and just doing anything, which is why everything crashed. But the point you made about, I too, in 2011 or 12, 2012 it was when I made the switch into the non-bank lending, side from brokering. And it's because of technology. The brokers, which is, what we are now in essence, had no technology. There was no e-signing, there was no docs. We were printing out packages. We were scanning them into the computer, emailing them to the customer, They had to print it out physically, sign the documents. You'd have to go pick them up or they'd scan them back. It was crazy. So the non-bank lenders were creating their own technology that eliminated a lot of that. And the pricing at that time was comparable, if not better than the wholesale broker pricing. So it kind of, the broker model just kind of went out the window for the most part. Brokers just went down to a small percentage because everything made more sense on the non-bank lender side. Again, that was back around 2011, 12-ish. Now, you fast forward, everything has changed since then. Everything has changed. What changed most dramatically was technology for brokers. So brokers, if you look at just 2004, the market share, the broker market share, in 2023 from then has grown exponentially. It took up 24% of all mortgages written in 2023 were by wholesale brokers. And, there's a lot of reasons for that. For me, when I opened this company in 2019, I was also, just like you, working for a non-bank lender, and it was not all right that, I'm looking at rates and pricing and just going online and saying what, XYZ bank is offering, and I'm like, they can get a better deal at so many other places, but they're trusting me with doing the right thing by them. And I didn't sleep at night. Like, I did not sleep at night, and it wasn't fair. So when I started to look back at the wholesale model, a friend of mine in the business that, who I would always have these conversations with, was like, why don't you open up your own company? I'm like, well, what do you mean? Brokering is dead. It's a dinosaur. He's like, no, it's not. Just look into it. I did. And I started pricing out loans. And like, when I tell you, when I priced out loans compared, apples to apples, I honestly just didn't believe it. And once I really realized what the difference was, that was it. It was like a light switch. I 100% said, this is what I need to do. The fact that I could give my clients a significantly lower rate and also make a decent commission and living on my own, beating all of our competitors in many cases by 0.5%, 0.75%, apples to apples. Like, why would I not do that? Why am I still here? So I put it into sixth gear and opened a company. And what's amazing is I talk to a lot of loan officers. I have similar conversations, and you're the first person I really talked to that when we went over this and we had that discussion, that you were like, okay, let's go. Like, what are we doing here? Like, you got it the way I got it. I don't understand why others don't. I don't know if you want to chime in here, but
well, I think the biggest thing, and I've tried to recruit originators for years. People are afraid.
Yeah,
they are unwilling to take chances. They don't trust their own abilities. They want that guaranteed paycheck, draw, whatever you want to call it. To me, I'd rather double down on myself and bet on myself that I know I'm going to be able to, do enough business and take care of my clients the way that it's going to come back, and I'm going to be compensated and be able to give a better product, better pricing, better service. When I sat down and we talked initially, and I sat down and looked at what is the mortgage business as an originator. So my life is to get up and service my clients. That's my job. That's what I've done for 20 years. It starts with people. The first reason I'm here is because of you. We have a lot of similar thoughts on how we want to live our lives. We are very driven. I'm very driven. I get up very early, and I have a plan from the minute I wake up till the minute I go to bed. I don't think a lot of people look at that. I think they're looking at how quickly can I get done with my work to then get home to do whatever I'm going to do. I can't wait to get up. Like, I want to go to sleep so I can get up for the next day to go do more. Then it comes down to really pricing. Everybody has products, okay? It doesn't matter where you work. Everybody has the products. The broker channel has more products and more options, meaning that we may have some avenues that we didn't have at a non-bank lender, which is great. But pricing still dominates because really I can have clients that have been with me for 10, 15, 20 years. If my pricing and my options are not as cost effective for them, because this is a huge, even though we say we have clients who've come back to us 1, 2, 3 times, the fact of the matter is this is a huge financial decision, the biggest in their life. It has to be the best financial decision for them. And I take great pride in that and talking to them about, hey, can we do a shorter term, pay more principal every month? Hey, can we get you a better rate? Do we buy down the rate? These are all things. What is your short-term and long-term plan with this property? So these are all things. I don't know if everybody does that, but that's what I do. This is my life. This is not my job. So I think that when you look at that, being with Forte makes a huge difference from being with a non-bank lender because now I'm able to offer all of those things. And then I think the final piece of it is you have to have a process in place that works. We talked about why am I with you as opposed to somewhere else is I need a doer, not a talker. Everybody talks a great game. We're in sales. Even though at the root of what we do is helping people, we are in sales. We have to be able to sell the client on what the best option is for them. I'm tired of talking to salespeople that don't do it. And you and I are salespeople who do it every day.
100%. Yeah. Thank you. So just one of the points you touched on was just reasons why somebody may not make the switch. And I'm hoping that some other loan officers perhaps that are watching this podcast, can get a sense of someone who's actually now made that switch over to this model, and as we discuss this further, hear more about how that's gone, how you feel about it now that it's been a couple months, and showing them that it's possible. But as far as just the comparisons, you mentioned pricing. So for me, one of the things that I've always harped on, and we have talked about in our previous podcast, is when a realtor refers out a loan officer, a lot of realtors will refer out a loan officer because they're great. They're great at what they do. They're really good. They'll call them back at 10 o'clock at night. They'll do whatever they need them to do, pre-approved letters. Okay, maybe that loan officer is really good. Maybe they're really talented. Maybe they're really smart. But at the end of the day, if their rate is and terms that they're going to give that client are, 0.5% worse, even if it's 0.25% worse, 0.5% or same rate, $10,000 in fees more, that is the farthest thing from the best solution for a referral source. Like that's doing the client an absolute disgraceful disservice to me. And that is one of the biggest things that bothers me in this business are realtors who have a relationship with a loan officer that they just send to because they're good and they get it done. That is not good for the customer. When they could send them to another loan officer that's good, that like a wholesale broker like us that can do a significantly better job on the terms and same service. It's just trying to educate. That's the point of this podcast, is to educate everybody, not just borrowers. This isn't just for borrowers. This is also for realtors. Like you need to know the difference between your non-bank lenders and a wholesale broker. Sit down with us. Let us educate you. Let us show you the difference. So I'm so passionate about that. And one of the things like we talked about, when you were talking about, saving this and, lowering this rate and what you can do to help. That was one of the biggest things that made me make the switch. Was I was like, wow, under this model over here versus what I was doing, I can now save this person, 0.75% on the rate, pay their closing costs for them with a lender credit. So it costs them nothing to do, keep their term exactly how many months, 27 years and 6 months right now. I couldn't even think of doing that over here. So to me, what good am I as a loan officer if I don't have this? This is the most powerful tool in the toolbox. And the freedom to be able to do that is just, I just don't get it, Bill. I know people aren't driven like us, and this isn't a shot at other people, but there's some basic common sense things there that whether you are driven or not, whether you get up at 9 o'clock in the morning or 4 o'clock in the morning, you should want to, make more money per deal while at the same time giving the customer a better deal and having more tools. Because that if you're a lazier mindset, that gives you more time to be lazy and make more money on less deals. So to me, this model should appeal to everybody. Everybody.
Well, I think the straw that broke the camel's back is when I was pricing out loans at the end of my time with the bank, with the non-lending bank. Every deal I had to ask for exceptions, and I didn't ask for exceptions to make more money. I asked for exceptions to get a rate so that my clients wouldn't leave to go with a competitor. And I had to pretty much do the deals for nothing. In the words of my employer was, well, we're going to have to do this loan, you and I, for nothing to match that rate. Well, then there's a major flaw. If nobody can make any money with what we're selling, then what we're selling is not sellable. And if our competitors and what the clients are telling me they can get is not from one other option, but multiple other options, then I'm in the wrong seat. And that's really, as far as the business side, why I was like, look, I've got to look for another option. This is just not, because everyone who's coming to me is a referral. It could be a previous client. It could be a family member or a friend of a previous client. They're all coming to me because I'm Bill. They're not coming to me because I'm the bank on the shingle on front of the building. So if I can't provide the best rates, the best service, the best options, then I have to find somewhere that I can, and that's why I'm here.
Yeah, no, it's true. Thank you. As far as just, I don't even know where to go with that, because that just sums it all up. As far as some of the programs, let's talk a little bit about some of the programs now that you're going to be able to offer to your clients, that your realtors should be aware of, that hopefully, some of them are going to watch this, and other potential, realtors in New Milford, please, you should be sitting down with Bill, because if he's not in your arsenal, you're missing. You just are. Some of the programs that we offered at Bill, you can kind of share more on, that I thought would be great as far as, in New Milford, we have some of the most aggressive pricing for, FHA and USDA loans, where, when I compare us to the non-bank lender pricing, it's usually 0.75% or more better, for FHA and USDA and VA for that matter. And it's crazy. So, why don't you talk a little bit about that?
Yeah, sure. I mean, so I would say for the last 15 to 20 years, I've really, focused on the USDA loan. So CHAFA, which is a low or no down payment option for borrowers throughout the state. That option, which is good for some people, is a 100% financing option that in New Milford, you don't have to pay the exorbitant fees upfront and monthly mortgage insurance fees associated with CHAFA, associated with FHA. The USDA offers a loan that is 100% financing, and there are limitations on all of these programs based on income, based on loan amounts. And that's why you have to work with someone who has some experience, because you could have someone that says, oh, I'm going to get a USDA loan because I looked online and I see that it's a low, no down payment loan, and they walk in and I say, oh, great. I said, who's living in the home? Well, what do you mean? Well, my girlfriend and my girlfriend's son, who's 23. And well, we have to take into consideration their income for qualification. Well, they're not on the loan. It doesn't matter. But these are all things that, again, if you don't have a professional who's done this for 20 years, you're not going to know that. You're going to say, oh, I'm going to make an offer on a house and waste the realtor's time looking at houses when you don't qualify for anything on your own. You don't qualify for anything under the USDA program because you have a misunderstanding of the guidelines. So I think the USDA is a great option in certain towns. I think the fact that we have from jumbo to conventional to low down payment to we have, for clients that are maybe looking for something where they don't have the traditional income sources. We have bank statement programs. We have every option available to any borrower looking to buy a home in the New Milford area.
Yeah. And just to touch on as far as with, it's not just the rates, it's not just the terms, but, our turn times on most of our not all, but the majority of what we're going to do from the time we submit, to underwriting in less than 24 hours, we have an actual loan commitment. I closed a loan recently, in this area. First conversation to the closing on a purchase was 9 days. So the important piece here, the tool for your viewers watching this is, everyone's talking about cash offers, this market, nobody wants to accept with a mortgage. Okay, well, what good is a cash offer, okay, when you can't close a cash offer deal for at least 10 days or 2 weeks anyway? By the time the ink dries, the title searches in, attorneys go back and forth, that's going to take 10 days to 2 weeks. So if we could provide a person that's trying to compete with cash offers a clear to close in 9 days, like that's probably the most powerful tool in the toolbox when it comes to this crazy purchase market with 10 buyers going after the same property. You may want to elaborate a little bit on that piece.
Yeah, I think the ability to provide a real estate professional, a realtor, an attorney, everyone who's involved in our process, with that confidence that we can meet and exceed the deadline expectations that's needed in a competitive market, I think it's a great point. So we have a client that I was working on last night late. It was about 8:30, 9 o'clock, and I'm back and forth with the realtor getting the pre-approval letter. And they're saying, look, there's going to be multiple offers, and I know that one or two may be cash. And I said, how quickly do they want to close? Is the house empty? Because this borrower is highly qualified. They've provided everything. They're already pre-approved. The only thing we need is to get an accepted offer, order an appraisal, order a title. It's the same time frame as far as the title work, as you said. Same time as someone doing cash. They're not going to buy the house without they have to get a title. So we are right in that timeline of someone with cash.
And just a quick point to add to that, with at least 10% down, which someone like this probably is going to be.
They do. And
it's a conventional loan, we're getting appraisal waivers on most of our conventional purchases like that. So they may even be able to provide a commitment subject to a title and homeowners insurance policy in 24 hours, where it's like, hey, give us title and commitment, and insurance, and we'll close the loan. Like this is different. Like when I talk to realtors and like, well, how long do you need for loan commitment? I'm like, you tell me. My response is always, you tell me. As long as everyone else performs their job, because it's not just us. It's not just us. The attorney is so key. Like how many times I've had an attorney wait until we issue almost a clear to close or a full loan commitment before they actually order the title work. And now we're behind for our closing date. It's like, well, I wouldn't have provided this. We wouldn't have gotten this far along if there wasn't going to be a clear to close. We don't do that here. We don't issue nonsense. So I think that's really important for a question for a borrower to ask an attorney when they're working with them, especially on a fast closing, is, hey, are you going to wait until we have a loan commitment before you order title? Because that's something that could delay things, because you never know what's going to show up in title too. There may be a lien or a judgment that nobody knows about that's going to take time to fix. So there's these little tools that we educate our borrowers, you and
I've talked about this. I view every business relationship as a partnership. Mm-hmm. So partnerships are built on trust. So if the realtor trusts you, the attorney trusts you, they will act in that aggressive manner that we need them to act. And we found, and we've already experienced it together, is when the attorney is not part of that partnership or that trusted circle, it makes it very difficult. And again, like you said, we can do everything right, and if that title hasn't been ordered or there's an issue with the title, that's out of our control. We can't tell the borrower to act or not act in a way that has something that is literally going to be handled by an attorney or between the title and the title company. We can't control that, is really what it is. So I think what I've always tried to do is I want attorneys to call me. They don't have to know anything about the borrower. They just know that I'm going to be honest with their client. I'm going to give them the correct direction. I'm going to put them on the right path because it makes them look good. If All I'm looking to do is to make a commission, right? Commission over customer. You will be, those guys aren't even in our business anymore. They can't be in our business anymore because they've already burned every bridge in the world. So I've always said client over commission. The more clients you take care of, the more business you get, you'll make plenty of money. And again, you can tell by the way that we talk about things. It's all about our passion for what we do. And because we're so passionate about helping clients, providing the best service, the best products, the best pricing, all of that, I never worry. I never get up and say, oh man, I hope I close a loan this week. None of that ever enters into my mind because I can only control what I can control. The market is what the market is. Interest rates are what they are. That I have no control over. All I know is that when I talk to someone, I'm going to give them the right information. I'm going to help them make the right choices and give them the best options, and then it will all take care of itself.
Yeah. One of the things that you touched on as far as we're comparing rates and they're going to go to a competitor. So one of the other newer loan officers that we have, when I was having conversations, it was just she was very demotivated. She was like, James, every time I get a customer, I spend an hour getting to know them. We have a great relationship, and I'm scared to death because I know here it comes. What's your rate and price? And and I'm pricing up loans, and I'm giving them options, and they end up going with a broker, a wholesale broker down the street. And I got so tired of that. I'm like, so I would literally just start pricing loans before even taking applications because it made no sense for me to build that trust and build those relationships when I was just going to get beat out. And she's like, that's what made me, research this wholesale broker avenue. And, that's why I'm here. But so that's such a good point. One of the things that I think you may want to just add here is for your clients that are listening to this, your customers, the best thing since sliced bread, in my opinion, is our free refinance. Nobody does this. Nobody does the free refinance. I don't know if you want to talk about a little bit how that works and what you're going to be able to do for them.
Sure. So, anyone who's purchased a property in the last, say, 18 months, 24 months has been a little sticker shock. Talking to even buyers now, I think they're a little bit surprised at what the monthly payments are, what the interest rates are. We both know that we're expecting a change in the interest rates to the favor of a client. And so anyone who's purchased or refinanced in the last year, 2 years, and anyone even now, they need to understand that they can come back to us at any point and look at a no-cost refinance. And I don't mean no cost like no points or no cost meaning no cost at all. Lowering your term, lowering your rate, and no cost to you. It's a no-brainer, and I hate that word because you always have to think about things, but this is a no-brainer. You're going to take your existing mortgage. You're not going to go backwards to a 30-year. You're going to stay right where you are or go forward. You're going to have a lower interest rate, pay less interest, and it's going to cost you nothing. So the only thing is making sure that obviously they are staying in communication with us so that at the right time we're able to act immediately.
Well, and that's another beautiful tool that your clients are going to have now is our post-closing, it is marketing, but it's not marketing in the sense that somebody's just going to get bombarded. Nobody likes spam in their emails. Everyone hates it. And we even had our first CRM that we started to utilize when I first looked into a CRM for Forte Financial. It was not good. It was one of those things where it's Happy Valentine's Day and all these. All it's doing is cluttering the borrower's inbox with another email that they don't need. So now our system now is it's one email a month that has to do with the borrower's home and their individual situation. It gives them an up-to-date valuation estimate of their house, how much equity they've built, what's going on in the neighborhood with sales, streets. There's so much valuable information that pertains to that borrower's home and their situation. And it lets them know, by the way, hey, you potentially could pull out $200,000 on a home equity. Did you want us to run numbers? It gives them information. So I put my own house in it and I get the report every month. And I love it. I play around with it, and it's you can kind of play around and mess around with it, but like people love it. Like the amount of responses we're getting that your clients will be able to stay in touch that way now as well too.
Well, I think too when you look at it, for a lot of people that's their biggest asset. A lot of people, because we were very involved during the low interest rate time, a lot of our referral sources and our clients were able to take advantage of very low interest rates, very short terms, where they're coming to the point now where that's their biggest asset now. And so to give them that valuable information of what that asset is worth in the current market. And the market is insane right now. It's near impossible to find a deal on a home that is not either, someone passed away or there's a divorce situation where they have to leave. Other than that, there are no deals out there. So this is their biggest asset. We need to give them the information and the power so that they can make the right decisions on how to handle that asset. I'll tell you the other thing that really, this has been the biggest, I guess, slap in the face of what's going on in the current economy is people have been living the same lifestyle for the last year that they were living for the 3 previous years, except everything's cost 25, 50, 75, 100% more than it did 2, 3, 4 years ago. Their income has not increased as fast as the costs of everything. So the plastic has been used. Maybe they borrowed and got a small personal loan. So now they're looking at their situation and they're saying, hey, I got $30,000, $40,000 in debt that I'm paying 8, 10, 12, 15, 20 or more % on. And you just sent me this information that my house is worth twice as much as it was 5 years ago when I bought it. Can I use that equity in my home to offset some of this debt? So we do an analysis and say, hey, look, you're paying $2,500 a month for your debt. You can take out a $50,000, $100,000 loan or line of credit, pay off all that debt. Now that interest is tax deductible. You still have plenty of equity in your home. All of that high interest, non-tax deductible debt is gone. And now you can get a plan. Let's just say it was $2,500 a month and your new $100,000 loan is $800 a month. Well, you can just pay triple payments and pay it off in a third of the time, where these 20%, 25, 30% credit cards, you're going to pay, you can even pay double or triple payments. You're not getting out of that debt for a long time. So I think that now people are starting to use their equity to take care of that debt. And look, we're all dealing with, we go to the grocery store, it's $200-$300. We go out to dinner, it's now $200. All of these things that we've continued to live, we're not all going to just stay home and not go out and enjoy our lives. It's all costing more. I think utilizing our equity to take care of debt, certain debt, is a very smart move. You just have to understand, hey, what am I going to do with this? How long am I going to be in this home? When should I take advantage of using that equity?
Yeah, I agree. And we're doing a ton of home equity lines. You have a few right now too. It's great because, well, first off, our home equity line of credit, we have a bunch of different ones, but the one that we've been doing the most of, it's a start to finish process in 2 weeks. And I say 2 weeks, we could do it in 10 days. 99% of them have no appraisal. You're talking 1 to 2 business days in underwriting. We send them disclosures, they e-sign. It's so fast and easy, it's so fast and easy, and the savings, like you said, and a lot. What we even have customers coming in now that are, not sure if they want to take out a home equity line of credit, but they're doing it anyway because they know, hey, you're not paying any interest or any money if you take out a line of credit and it sits there with no balance. Because just like a credit card, if you have a credit card, are you paying anything on it if there's no balance? No, you're not. So this is the same thing, but I think it's really smart for people to do this and have it sitting there, because you never know what problem could arise that you need money for. B, you don't know what opportunity could arise. Some dream house or second home possibility may just pop on the market out of the blue that you need to jump on immediately. And, having that tool in the toolbox to use when you need it, I just think everybody who owns a home should have a HELOC, whether they intend to use it right away or not, because there's always going to be a reason down the road. And here's what's cool. What's really cool is a lot of people, the only issue people have with the HELOCs are they're all based on prime rate, whether it's prime minus, prime plus, whatever it is. If you get a HELOC today, and let's say the rate is 9%, whatever it is, that is tied directly to the Fed funds rate. When the Fed cuts rates, they cut rates 0.5%, let's say, and that rate was 9%, your rate automatically is going to go down to 8.5%. That rate is not locked into whatever you set it up with. So, the expectation is the rates will be a couple percent lower in the next 2 years. The reality is you're going to be at 6-7%, in not that long of a time. So, but yet you have it in place now. So I just think that's wise. Anyone listening, if you don't have a home equity line of credit and you own a home, let us run the numbers for you. Let Bill run the numbers for you.
There's two huge reasons that people who have high school age kids, who maybe they've been in their house for 10 years, they're going to be in it for another 10 years. That's their plan. There's two major reasons. Number one is college education. Okay, if you are going to pay for your child's college education, you can utilize that equity to pay for that, as opposed to getting student loans at 8, 9, 10%. Secondly, if you've been in a home that might be 20, 30 years old, and you're going to be there for another 10 years, I used to talk to people all the time that used to say, oh, I'm going to redo my kitchen and bathrooms before I sell. Okay, whatever, that's your choice. Do it now. Enjoy it for the next 10 years. Put the kitchen in, get do the outdoor patio, the pool, whatever it is. Do it now. The equity is there. Take advantage of it. It's only going to increase the value of the property. You have new bathrooms or a new kitchen, or you add a pool, or all of these things add value and marketability to your property, so that 10 years from now, hey, a 5 or a 10-year-old kitchen is a lot better than a 30-year-old kitchen. So then when you go to negotiate, oh, we did the kitchen 5 years ago, we did the roof, we did this, we added that. Those now increase the value of your house and the marketability of your house, as opposed to that house down the street or your neighbor where nothing's been updated. So now your house is going to sell quicker, it's going to have more valuable, and it's going to be much easier to market. So I think that's a huge one. And I definitely, going through the whole college education thing, college education, it's a business. And it's very expensive. So taking that equity out and then paying or helping pay for that education is a great way to use that equity that you've put into the property or has appreciated, and you don't have to now go get student loans and deal with the whole student loan world.
Yeah, no, that's great. Thank you, Bill. That's it's helpful. As far as realtors are concerned, this is huge. This is huge because a lot of our competitors, and I don't even like to call them competitors because they can't compete, but our competitors have these affiliated business relationships with real estate companies that are being pushed on the realtors. And this is, is a real hot point for me, and same with you, where, it's not even close. So now, you can now, with what your toolbox is now versus where it was, you can go in and you can sit down with all of those realtors and make, hey, here's the difference between what you're getting with your in-house and what I'm getting. We compare rates to them all the time. It's not even close. Let's talk. Let's work on this. Not to, this is a whole nother podcast,
right, yeah.
But just the whole concern as well with the whole buyer's commission. I mean, it's just going to make it even that much more relevant and more of a reason why, they should be working with someone like us, because of the amount of help that we're going to be able to provide those buyers, to help them with the, the buyer's agent commission issues that are on the table right now. Again, we don't want to get too much into that, but it's just a touch. No, unless you want to add some color.
But I mean, we talked to these. We've talked to the realtors, but we've also talked to the loan originators that are in those positions, and they are so limited. Yeah. And look, the buyer has changed dramatically. I used to be able to meet with a client, and it was I mean, first of all, there was never shopping. There was never anything. Number one, I had the product and I had the rates. Once the rates went away, and with the market now and the new buyers now, the new generation of buyers, everything is done online. They don't even want to come in and meet anymore. So if you're not competitive on the rate-wise, they will leave in 2 seconds. They won't even consider you unless, as you said before, what's your rate? That's what they're asking. What's your rate? What are your costs? So to be able to offer options at the best rates, at the lowest cost, with the best service and the most products, now we're in a position where I don't understand why anyone is using someone with limited products, with higher costs, with higher interest rates. The only reason is, to me, is they don't know that we have a better option. So yes, I think the hard part is they're great people. We know there are some really good originators that are in those roles that need to say, hey, this isn't what's best, not only for me as the originator, this isn't best. This is not best for the clients. I'm not going to do this. Now, we talked about it originally in the podcast at the beginning, is they're afraid to leave and step out of their comfort zone.
Yeah.
But that's what they need to do. They need to trust in their relationships and what they do, because they're very good, and come on to where they can actually help and give the best options for the realtor and for the realtor's clients.
Yeah. Again, not to beat a dead horse here, but the best option for a client isn't necessarily just the most talented loan officer. That is not the best option. It's just, I will fight this till, we're blue in the face. It is not. You take 100 clients and ask them, would they prefer, the smartest, most talented loan officer at, and get a 7% interest rate paying a point, or having just a good loan officer maybe, or if they're not the best, but they're good, they're competent, they're going to give them a 6.5% rate and no points or whatever. I'm just using kind of a general.
Sure.
Like if you ask 100 of them, I'm sure that all 100 of them would prefer the decent loan officer with significantly better terms, because that's thousands and thousands and thousands of dollars.
Yes.
So let the customer decide. Give them that opportunity,
right,
which many realtors are not.
Right. I think the realtor wants to work with, as you said, wants to work with the one who's going to be the one they're comfortable with. What happens is when that person and their referral partner is not offering the best option, they don't necessarily want to leave what they know, which is that I know that the loan originator is going to return the call, get me the letter, do what I need. So I'm just going to continue. And really, I'm just going to say, I'm going to just play, hey, I don't know what your situation is. So whatever she says or he says, that's what you should do. I think that's where we are, is that the realtors do not want to take the time to see what we offer. And look, I have relationships with realtors for 25 years. I live with a realtor. My wife is a realtor, and we talk all the time. There is for a long time when I was in the non-bank lending, she would say to me, I'm going to go with my in-house person because you don't have what I need. And she was right. There were times when you and I would talk. I would say, hey, I need a line of credit. Why do you need a line of credit? Because we don't have one. How do you not have a line of credit? Or I don't have a reverse mortgage. Right? Or if we have a reverse mortgage, I don't know anybody who's done one. So to be able to have all of the tools in the toolbox, and to have the support of these lenders, who have people whose whole lives are just that product or just their line of products. Now we can call someone who's experienced, and we can just call, hey, here's my situation. And they say, great, this fits perfectly. Here's the program you want. Boom, boom, boom. We put it together. We educate ourselves. We present it. And now we can close and give them the best deal. Where in the past it was, oh, we don't have that. Call somebody else.
I mean, that's just crazy, to think that your own wife is a realtor and, she's referring to somebody else. Like, that's crazy. Obviously, that's now out the window. Right. She knows you're the best game in town, again. And that's the thing. So just to touch on this for realtors, like, just like you said, your rates, years ago, were at least the same or better than the competitors. And the realtor relationships you had that were built on that, there's a shift. There was a shift over the last few years that became invisible. And I think a lot of loan officers that are still working under these models that you and I both were don't realize it yet. And they don't know that. Although they know their pricing isn't great, they don't realize that there's another model that is so much better. And so the thing for realtors is your loan originator that you've been working with for 10, 15, 20 years, you know, if they're a non-bank lender, maybe their pricing was amazing for many years, and maybe they're still giving you great service, but have you checked to see against, you know, what's actually out there? Because I respect relationships and loyalty, but not at the expense of thousands and thousands of dollars to the customer. I want to give an example here. So realtors, just so you know how important this is, that you should be doing this. I had a customer that their attorney is you know, one of the attorneys in our network that we work with. He saw a loan estimate that this realtor referred their mortgage person to, gave him a loan estimate. He went to the attorney. The attorney looked at it. Attorney was just, you know, you normally used to seeing all of my loan estimates and all of my rates at the time was, it's like, you know, Mr. So-and-so, would you mind if I just had another lender take a look at this? Because this just doesn't look, it's not trying to steer. It's just saying, hey, this doesn't look right to me. Can we get a second opinion here? He sent it to me, and I said, oh my God. I said, I could, based on this, the credit score, all the same criteria, I could give him a 0.5% lower rate with 0 points versus that 0.5% higher rate and 2.5 points. So it was literally not just a 0.5% lower rate, but they were also charging like $9,000 in points that I was at 0. And so I said to the customer when I talked to him, like, how did you find this originator? And he's like, well, my realtor referred it. And, you know, so realtor, like, that is a horrible, you know, look for you, as far as you're the one who put that customer in that situation, because that's your trusted referral source. Get out there and get educated. Because that is going to happen more and more and more as the wholesale shift continues. You know, there's a reason why it's 24% now, whereas back in like 2012, 13, it was 8%, maybe 9%. It's gone up exponentially. And there's reason for that, because it's not just the best rates, it's also the best process. How state of the art is everything we have? Everything is like.
Well, I have been on the borrowing side many times, both personally and on business side. And working with banks is different. Traditional banks is different. Everything takes 3 times as long. The people are not available past 4 or 5 o'clock. As we've talked many times, we're on the phone early in the morning. We're on the phone late at night. We're sending pre-approval letters, because that's what's needed in this market to get the deal. So when someone says, oh, I'm going to use ABC Bank in town, and I say, okay, who are you working with? Oh, I don't know. I just call the number, and then I go into the loop, and then I put my online application, and someone will get back to me. Who? I don't know. Okay. So I think we are able to provide everything that their local bank can offer, except tremendous amount of service. We are, for lack of a better word, we are 24/7. We don't work 9 to 4. We work every weekend. We are available when they need us, not when we're open. We're open all the time. So that, to me, has been the bigger shift away from the local bank. Because, again, the local bank that I have my checking and savings with and my auto loan with, they are not the best option, even if their rates are the same or better, because that fits a small percentage of their clients.
Yeah.
Who have perfect credit, who have a large down payment, who have the most traditional income. Again, they're very smart. They market what their best option is, but the likelihood of you qualifying may not be that high, where we're going to look at your situation on you, the individual, and then get you the best option for your situation. not smash the circle through the square. We're going to create a circle to put you through that gives you the best option.
Definitely. And just talking about that perfect option that, that advertised rate is, in most cases, our rates and terms for that perfect option are better. In most cases, not all cases, but in most cases they are for that perfect situation. So it's funny because I have a client that I did a free refinance for, back in 2021, very well-to-do client. And I didn't know him at all before he came in the door. There was no relationship. A friend of his that I had just done one of these free loans for had referred him to me. He's like, hey, James, my bank, XYZ Bank, offered me this. What can you do? I came back. It was a significantly better deal, no cost. He goes, I have a few $1 million of my money with this bank. Like I've been a customer for 20 plus years. How is it possible? You don't know me from a hole in a wall. You've had one conversation with me. You can give me a significantly better deal than them. And that's because times have changed and your bank is not your best option in most cases. It's this model is the best. If it wasn't, I wouldn't be here talking about it. I would go find what's the best. I would stop what I'm doing here and go find what's the best. And I mean, we can actually sell rate. You see a lot of these other non-bank lender companies saying, oh, sell payment. I've been in those sales meetings before talking about how they sell, and it's that to me, that's just ridiculous. Like, how about let's keep it simple. Take all the guesswork. How about you just give the customer exactly what they want? How much easier is your job? How much happier is everybody? How many more referrals are you going to get? Like, instead of playing a sales game, sell me this pen. How about here's that rate. You want that rate with no points? Here you go. Oh, okay. Thank you. Let's go. Like, simple.
Yeah.
Done. Move on.
And I said to you several times, I needed to be with a doer, not a talker.
Yeah.
Everybody talks sales meetings and this and that. We're going to do this, and you need to do that, and you need to do this. How about we just put together a plan so that we can actually do loans for people that helps them get the best deal? Not talking about, as you said, well, we don't have that, but we can do this, and no. I don't want to sell alternatives to the best. I want to sell the best. That's what we do. Yep. We have the best programs, we have the best rates, and we have the best service. I can have the best service in the world. If I have to sell, something that does not fit the client, then now my service doesn't matter because I'm actually not providing the best service because I'm trying to push something that I have in stock rather than what they need. Now we have everything. We can actually tailor that program to what they need and give them the best rate, the best options, and the best service. And that's the difference between what we do and what non-lending banks and banks do. They have to sell what's in stock. That's all they have. This is our rate. This is our option. That's it. Well, I don't like that. So let's go over here. Let's see what they have. Hey, can you beat that? Yes, we can. Okay, great. That's what we offer, which is completely different and obviously completely beneficial to the client.
Absolutely.
And our referral partners. Now the referral partner doesn't have to worry about whether, look, we could, like you said, we could be the best guy in the world, the best salesman, most reliable, return the calls, do everything that you have to do. But every client is like, my rate wasn't very good. It was really expensive. Not anymore. Now we offer everything.
Yeah. Awesome. So, Bill, is there anything else you want to share? Because I'm thinking, we've covered a lot.
Yeah. No. Like I said, I'm happy to be able to make the next big step forward. Yeah. In the mortgage financing world. It's been part of my life for over 20 years. I've met countless referral partners, but most importantly, countless clients who've become friends, trusted business partners in their lives. And I'm happy to be at Forte Financial to move forward and do this for the next 20 years.
It's an honor to have you on, honestly. I mean that because it's very rare that I meet people like you who, like you said earlier, are like me in a lot of ways. Obviously, we're different, but get up early, work out, just hustle. Like what's exciting, not and looking to do the right thing. It's all about doing the right thing. Like I had a client yesterday. I said to him, like, listen, I said, if you want to walk away from this deal, I'll help you, whatever you need. Like, I don't want to close this deal and make money if that's not what you want. We're in a business to close loans, but not if that's not what you want. Like, I'm for you, whatever you need. And you share that same mindset and you share the same work ethic. And I love it. And you get it. It's part of our mission, So, so excited to have you. This is going to be a beautiful thing.
Yep.
So 4 Main Street, New Milford, Connecticut, Bill Granata, Forte Financial. Give him a call.
Thank you.
Thank you.